Well, good afternoon, everybody, and welcome to Business Espresso. This is your shot of business acumen. Every 2 weeks, your hosts and their guests will bring you quick insights, tips, and actual intelligence to help you and your business grow, become more profitable, and more fulfilling. Let me introduce you to your host, or your hosts, plural. Christina Gilbertson is a small business attorney focused on helping small business owners protect what for many will be their most valuable asset, their business. She left the big firm world to create a model that small business owners can find accessible and usable. Sam Syed is a financial planner and wealth advisor with international experience. From London to Dubai to New York, and now in Colorado, he serves clients to help them protect their assets and their families with plans. My name is John Geese. I'm your back of the room host today. I am your business development consultant. I help small business owners grow their business from an all-consuming job into a business that runs and is profitable. And let me introduce our presenter today, Mike Hurdle. Mike Hurdle built Tax Time CPAs to meet clients where they are. No fancy jargon, no stuffy business suits, just words and language that are built for people to understand. The firm is built on subscriptions to encourage proactive communications, so you get your questions answered in real time. With over 20 years of experience covering everything from corporate to nonprofits, Mike's passion is taking his wealth of knowledge and converting it into effective tax strategies for his clients. Today, with the recent changes in the IRS code, Mike is going to update us on the meal deductions. Please join me in welcoming Mike Hurdle.
Well, thanks, John, and I'm happy to be here and to present these changes. The first thing we want to do is just a little background. The meals deduction has been around forever, and there's been all kinds of rules on it. And in 2018, with the Trump tax cuts, the Tax Cuts and Job Act, a lot of those changed, and it left a lot of people reeling. 50%, certain things were not deductible, and then lo and behold, the last change came this past December, and there was some dramatic shifts to really try and get people to spend money on meals and deductions. And I think there's a lot of opportunity here for small business owners, especially, to maximize those deductions. So first thing we want to do is we kind of want to look at what is deductible. So the following expenses are not deductible. And these were deductible under the old bill back prior to 2018, but they are no longer, and they always won't be. So sporting event tickets, transportation to and from a restaurant, club memberships, we get this a ton. Hey, if I join a country club, can I deduct that since I'm taking all my clients there? No, that's specifically excluded out of the act, so that's not. But any meals that you have there are deductible. But again, the membership fees, not. And any meals entertainment, they're not listed separately on an invoice. So if you go to a sporting event and everything's included and it's a gala, it's an event, those are not going to be deductible. So those are the ones that are not deductible. So let's kind of move into the ones that had a little bit of a change on it. So the following types are generally 50% deductible. And I've highlighted in red the change that came out in December. And these have some pretty significant impact. So meals are provided for the convenience of an employer. You know, if you have employees, you're doing something for overtime, you know, they're still 50%. But if those meals are provided by a restaurant, and here's the big change. The IRS code came in and said, we want small businesses to start spending money in restaurants. So that became 100% deductible in 2021 and 2022. So any meals that you're going out, that's 100% deductible. And meals included in charitable sports packages, those are also now going to be 100% deductible. Water, coffee, snacks at the office, no charge. Those were always 50% deductible. That's just the way it is. And the change is really designed to encourage people to get back into the restaurants and start to help the restaurant industry. And I know, you know, politics aside, some people say, hey, the best way to get them back is to just let them open up at full capacity. Well, this is the way the IRS is doing it, so we got to figure out ways to kind of maximize our tax deductions and capitalize on it. So the next set is really where the rubber hits the road, so to speak. So meals in the office during employees, stockholders, agents, those are going to be 100% deductible as well if they're provided by a restaurant. Now, one of the big things that kind of comes into play here is what constitutes a restaurant. If I have it catered, does that constitute a restaurant? Well, if you get it from a catering company, no. And it sounds counterintuitive, but if you get it delivered from a restaurant, yes. And the idea is in the code, it says the food that you get from a restaurant has to be available to be consumed on premises. So if you're ordering, so we want to keep that in mind as we're doing these types of events, that catering, not necessarily for big, large events, would be 100%. Now it's 100% because it's part of an event, but if we were just doing meals, we want to be able to focus on tracking and identifying what's coming from restaurants versus what's coming from other sources. So for example, if you go and you get food out of the gas station, you buy a whole bunch of prepackaged sandwiches for your staff, they might not love you, but that's not going to be 100% deductible. That's going to still be 50%. But if you get a nice, good restaurant meal to deliver, that's going to be 100%. Meals during business travel. So if you're traveling for business, historically, those have always been 50%. You're out on the road, you only get to deduct 50. That's 100% as well if it's done in a restaurant. Seminars and conferences. A lot of us travel. A lot of us do a lot of extra things to kind of build up our sales staff and to get trainings. Those are now 100% as well. The other thing that we want to be able to make sure that we're doing, though, is there's always the business purpose. It still has to maintain the business purpose. And we'll talk a little bit more about how we can get other things classified as business purposes and kind of expand that so that we can maximize how often we can use these and how we can maximize these deductions. Client business meals, this is a big one. So when you're taking out a client, as long as the taxpayer is present or an employee is present, and it's at a restaurant or delivered by a restaurant, to go from a restaurant counts, that's going to be 100% deductible. And the last one, I've got some small business owners here that do a lot of events, conferences, trainings, multi-level marketing, team building events. That's critical to recruit new promoters in your categories and in your businesses. Those are 100% deductible. So that's a big one. So we want to be able to make sure that we're tracking those as opposed to otherwise. So the 3 bookkeeping recommendations that we have. So I get this question all the time from people from the IRS is, what do we need to do? How do I identify those things? Well, we really want to be able to keep the bookkeeping consistent. And the easiest and best way is to separate those expenses on the front end. If you hand it over to your tax accountant at the end of the year and say, here's all my receipts, the accountant's not going to spend time to go through all those receipts. He's going to put them all in one bucket, put them in the 50%, and you're going to lose it. So what we really want to do is separate some accounts in your chart of accounts. If you're using QuickBooks, it's real easy to set those up. But you want to have a certain category for travel expenses. Travel expenses are always 100% deductible. So we want to keep travel in that bucket. That's airfare, that's hotels, that's taxis, that's Uber, Lyft. Those things are all travel expenses. And we want to keep all of that separate because we don't want to muddy the water in that. The second thing is we want to take travel meals out of that. Now, even though now they're 100% deductible, so it's in the same category, what we really want to be able to do is after 2021, we want to be able to keep those separate. And we should always have travel meals in its own separate category away from other meals. So you have travel meals. We also want to create a separate account for kind of social meals, employee meals, company picnics, company Christmas parties, those types of things. Because now if we have those being done as events, those are 100% deductible and we're tracking those separately so we understand where those going. And the last one that we really want to do, and this is more from the accounting side and budgeting and planning as you kind of run your business going forward, is you want to be able to create a new account just for restaurant meals, because you want to be able to look back at this year and say, how much did I actually save by implementing this tax strategy? If I could, every restaurant meal in its own separate account, at the end of the year, I'll be able to go in there and say, okay, I spent $2,500. Here's the actual tax savings I was able to realize by doing this. If you lump them all together, come trying to do your budget for next year, you're not going to know, hey, I need to scale back a little bit or I need to spend more. But we want to be able to evaluate the tax saving strategies that we utilize to make sure that they're effective and we're actually getting the biggest bang for our buck. So when we're talking about saving on taxes, like who wants to save $10,000 on their taxes? All of us want to. If I told you, is it wise to spend $30,000 just to save 10 grand? No, of course not. That's not what we're trying to do, right? I had a mentor of mine once tell me, you can go broke real quick, spending a dollar to save 33 cents. So we want to make sure everything that we're spending is appropriate for the business. But the effective business strategy, and this is where the shift comes with some of these rules change, the main focus of an effective strategy is to identify expenses that you're already paying. Like, we don't have to go spend more money. We're already going to spend this money. How do I change the character of that expense from personal to business? That's where we're going to be able to have a real big buck. We're not talking about having to go out and spend more money. We're talking about the money you're already spending. How do we change it from personal to business? And one of the key ones I always talk about when I talk to clients is charity versus marketing. If you give $500 to your church, yeah, that's great. It benefits the church. That's charity. Unless you itemize, you're probably not going to get that deduction on your taxes. However, if your business gives the money to the church and says, hey, throw my logo up, give me a mention, give me something so I can characterize it as advertising, now all of a sudden it becomes a business expense. I spent the same amount of money, but one of them's giving me a 33% rate of return if I'm in that 33% bracket. So what does that really mean for us here? Well, with the new 100% deductible meals, basically all of your meals that you spend in a restaurant can essentially be 30% off. That's what we're talking about. We're talking about as small business owners, you going out, you're already eating out. Now we're going to really focus on how do we get that business, that meal that we're spending on, how do we get it characterized as a business expense? All we need is a business owner in attendance, you, and discuss business operations. Then that's going to categorize as a business meal, and it's going to be 100% deductible. You can have other people at that event, right? I can go out and have a business discussion with John. We can have dinner. That's 100% deductible now. I can also take out my girlfriend and have her, and we can talk, and she's got her own business. So now she's a possible client. Well, that becomes 100%. So here's one of the savings examples. So we're going to just kind of go from the top line down. Traditional spend per week. So again, this isn't a lot of spend. Most small business owners, this is probably on the low side. But let's say you go out once a week and you spend $50. All right. Yearly expense of $2,600 on meals. Well, with the old rule, only 50% of that's deductible. So you get your tax return, $1,300 shows up on your tax return as a deduction. You're in the 30% tax bracket, so your taxes went down by $390. You'll take it, right? That's basically a 15% rate of return, right? 15% savings. Your out-of-pocket cash on that was a little over $2,200. Now let's say under the new rule, we're going to double that. We're going to say, hey, one of those other business meals that I'm already doing, I'm going to change that character of it so that it's a business meal. And we'll talk more about how we do that. But now all of a sudden I'm spending $100 a week. Okay, $5,200 a year in meals. $5,200 of it now is fully deductible, which means you save $1,500 on your taxes. $1,560. That's a 30% discount. The big one here is notice that the out-of-pocket cash is only $3,600 as opposed to $2,200. In other words, I spent double on meals and entertainment, and my out-of-pocket expense only went up by 64%. I got twice the goods for only a 64% increase. That's what we're talking about here. And that's really where the power of this is going to come into play. So what are some of the things that we want to talk about to really maximize that 64%? How do I get to the point of saying, okay, that's great, but Mike, you just said I don't want to spend $30,000 to save 10. Now it seems like you're telling me I got to go spend more on meals. No, what we're talking about is the money you're already spending on meals. Now might be the time to kind of take a step back and say, hey, maybe it's wise to put my spouse on payroll. Now all of a sudden, that's an employee meal. Now all of a sudden, characterize it. I'm out at dinner with my wife with my husband, with my girlfriend, they're technically an employee. This is an employee meal, 100% deductible. Every date night I have now, 100% deductible. And I'm gonna count all of that to kind of write that off on my taxes. But that's kind of what we have for that. And the other little thing that you want to think about is that's really where the rubber hits the road, taking what you're already spending, recharacterizing it into business, and being able to get that tax deduction. And that's where the rubber hits the road to save some money.
Hey, Mike, we have a question. If a small business owner goes out to dinner at a restaurant and there are 10 people in attendance, they're talking business. The question is, do you have to pay for all of the 10 people, or can we just pay for our own dinner? And would that be classified as a business expense? I'm assuming that this is like at a networking event where the cost of attendance is the meal.
Yeah, you can do either. If you want to pick up the tab for all 10 would be deductible to you as a business expense. If you just wanted to pick up your portion at a networking event where we all pay our own meal, that's 100% deductible as well. So however you want to do that.
Great, thank you, Mike. Yeah, the other question that you had, you said that the business owner had to be in attendance. What about small business owners that have salespeople that are out entertaining customers, taking customers to dinner, proposing business, talking about business, reviewing business? Is that deductible for the corporation or the company?
It is. The code is written as the business owner has to be in attendance or an employee, just one. So if you have an employee who's a sales rep and he's out there representing the company, that is going to be 100% deductible, and everyone they also pay for. And one of the other things I'd like to kind of mention is, not everyone at the table has to be engaged in the business conversation. So I use the example of, I'm going to put my spouse on payroll. We're going to go out to dinner. We're going to talk a little bit of business for maybe 5 minutes, talk about budget, talk about marketing, and then it's going to be personal, but it still counts as a business meal. Guess what? I don't even have a babysitter for the night. There's 2 kids there as well. The IRS in the past you'd have to write out, kind of exclude the kids' meals. You don't have to do that now. The entire check is considered a business meal. So not only are you be able to get your spouse in a business meal deductible, you're allowed to slide your kids in for that restaurant. So you can have a business meeting at McDonald's and have 3 kids meals on there, and those are all 100% deductible under the current code.
Nice. So audience members, please feel free to ask questions. Christina and Sam, do you have questions as well?
I do, and I wanted to follow up. You said that employees or having your spouse as an actual employee on your payroll, that would qualify. What if your spouse is an independent contractor, or you have an independent contractor that is meeting with clients, as part of their business or part of their services they provide to me? Would that qualify, or is it only for folks that are W-2 employees?
No, it would count for if you're paying the independent contractor as a business expense out of your company, then the meals they engage to discuss business would either be deductible on their business return, or if they're reimbursed by you, it would be deductible on your business return. So you can't double dip. Both people can't deduct it on each of their tax returns. Just one of you can, but it can flow up to the originator of it.
Okay. And then you had mentioned your girlfriend, like my husband, he's not currently working for me, but there's rarely a conversation that the 2 of us have at home or at a restaurant otherwise where my business doesn't come up. Does he have to be on my payroll or somehow affiliated for that to qualify, or would that count because I, the taxpayer, am present and I'm talking about my business?
It qualifies just as you. So he doesn't technically have to be on payroll, but one of the things we always want to be able to do when we're talking about defense against the IRS and anything that they put forth, the more documents, the more walls and strategy that we have that shows, hey, this is business, this is business, this is business, the better. So putting him on payroll for 1 hour a month consulting fee, or 1 hour a month as a part-time business idea person or business development person, that covers him, because now he is a W-2, even if it's just an hour a month. Now it's very easy to defend that, whereas the other side, it's still defendable, but now it takes a little bit more writing and documentation.
Thanks.
Mike, this just sounds remarkable. Sam, I'm sorry, looks like you had a question.
No, just it was a quick one just on, I know we've seen 2023. Is it certain that things will just go back to how they were before, Mike, or is there already talks that this could be the new norm?
Well, I think things are going to go back. Again, this was a law that was passed and signed by President Trump, and it had a 2-year shelf life on it, and it was really designed to help restaurants during the pandemic. So it's got a 2-year shelf life, and one of those types of things with IRS legislation, when they pass them so quickly in Congress, they always have expiration dates. In order to get something to be a permanent tax code staple, it's got to pass both parties. And a lot of times it doesn't. It just passes one side. So I believe this is going to be a two-year stint. But again, I think there's a lot of opportunity here for people to spend some good money, which the IRS and Congress want you to spend in restaurants. And that's why that deduction's there. Is that's their intent, is for people to use this and use it a lot. So every small business owner should take advantage of it and not feel guilty about taking advantage of it either.
And you've done some nice straightforward illustration there on the last page that we're looking at. If there were people spending thousands a month on foods, they're bigger companies and whatnot, would you recommend with the excess cash putting it into some type of SEP IRA or another pre-tax to lower their tax rate?
Yeah, I mean, again, you want to be able to compound your tax savings as much as you can. So again, we want to reduce our taxes and then turn around and flip it and reduce it as well. So again, here we can kind of save 30% on taxes, and then if we throw it into a SEP IRA or a solo 401k or however else they want to kind of invest in that, now you're actually getting that double compounding right out of the gate on tax savings.
Thank you.
I have another question for you, Mike. I know that in the past that you mentioned that some of the tax savings were exclusive to C corporations. Are any of these new tax deductions and everything, is that dependent at all on business structure type, or is it everybody across the board at this point?
None of these are restricted by structure type. So all of these are available to Schedule C, partnerships, LLCs, S corps and C corps. One of the benefits of having a C corp, and again, this is kind of in your realm, is C corps have a lot of fringe benefits that executives can take advantage of, gym memberships, things of that nature. But for small pass-through entities like ourselves, Congress and the IRS really wipes those out because they want to make sure that people are paying their fair share of taxable income. But this one is across the board. Everyone gets to use it equally.
Great.
All right, it looks like there are no more questions from our audience. Thank you, Mike. As always, this is remarkable information. Every time I sit down with you, I have an opportunity to learn something, and I appreciate that. For our guests, you can connect with our hosts by joining them on LinkedIn. Their LinkedIn contacts are in the chat. You can also join us at Facebook and our Facebook group, Business Espresso. Next time we meet, which will be in 2 weeks, we're going to have Christina Gilbertson talking about some of the things you heard about today, the differences in the different kinds of organization structures and why we might want to think about those. So join us in 2 weeks for Business Espresso, your jolt of business caffeine and business acumen to help you grow your business, sustain your business, and have more fun. Have a great day.